mortgage markets and more. I'm your host, Peter D'Angelo. I hope you all had a wonderful week. Welcome to Friday, everybody. We made it, and this is one of my favorite episodes to do every month. We have the National Association of Realtors existing home sales data for February. Without further ado, let's dive right in. The total sales for February in 2024, seasonally adjusted. Reminding everyone again that seasonally adjusted isn't the actual figure of how many homes were sold, but rather it's a calculation based on the seasonality of the business as well as the number of actual business days there are in the month when you consider holidays. That's how we come up with the calculus for seasonally adjusted. The seasonally adjusted sales for February was 4.38 million units sold. Single-family homes, existing single-family homes, which is a component of that total number, was at 3.97 million seasonally adjusted for February, and the median sales price for single-family is at $388,700, ticking slightly up. We did peak last year in recent time, so we're seeing it creep up little by little. Obviously, there's been a little bit more happening, so that's good news, and we're seeing some more activity in the markets. Let's remember that January, we had a lower interest rate environment still. And a lot of people who entered into contracts that closed in February, which is where all of this data is being captured from, they had lower interest rates than we've seen over the past few weeks. But the good news is we're on our way. We're getting a little bit lower. I'll save that for the end. Not to forget our condominiums and co-ops. Those sales were at around 410,000 units seasonally adjusted, up slightly from January. We saw January with 400,000 units sold for condominiums and co-ops, seasonally adjusted, that is. And the median price there is $344,000. So the median price, we talked about that for single family as well as the condominium and co-ops. Median is not the average. The median is the most commonly occurring number in the data set. So that means for condominiums and co-ops, $344,000 was the most commonly occurring sales price when we look at all of February of 2024. Now let's break this down by region. So sales increased in the West, South, and the Midwest and remained unchanged in the Northeast. So where I am, we laid flat. It's pretty even. Year over year, sales declined across all regions. So we saw lower volume. In the Northeast, the median sales price was $420,600. And this is for all existing home sales. So this is inclusive of condominiums, co-ops, single family. That marks an increase of 11.5% from the previous year. 11.5% increase. I'm going to make a point at the end of all this when we look at all the regions. When we look at the Midwest, the median sales price there was $277,600, representing a 6.8% rise year over year. In the South, the median sales price was $354,200, and that shows an upturn of 4.1% year over year. And the West Coast saw a median sales price of $593,000, and that's a significant increase. We're talking about 9.1% year over year price appreciation. Even though volume is down, the number of homes sold is lower than compared to last year. This is a high appreciation of home value. I'm going to make the point here, taking a look, you see, this is in the numbers. If you're thinking about purchasing a home, waiting is not going to be the answer. Because if we just follow this trend, we're just looking back 1 year. And last year, let's remind ourselves too, it was a crazy year when it came to interest rates. It was super volatile. It got super expensive at one point in October for people to purchase. But still, there was a lot of activity. There was a lot of value that was still being generated in the real estate market. It stands to reason right now, looking at all of the regions across the U.S., if you wait, that home that you want to buy could be 5 to 8% higher 12 months from now. So thinking about buying a property now versus later, a good case could be made, even though our interest rates are still relatively high, a good case could still be made that buying now hanging on to it will certainly probably be, I'll say that, probably will give you a higher likelihood of success in the future. If and when rates come down, you get a little bit of a reprieve. You've already locked in what that home costs you. You've built up some equity purely as a function of the market. And now you could be in a better position to refinance with more equity. More equity could mean a lower interest rate. So these are things to consider if you're on the fence about purchasing now or waiting. Let's get back to it. The existing home sales in February saw a significant increase of 9.5% month over month to a seasonally adjusted 4.38 million units sold. However, if you compare that to the previous year, we're still seeing a decline of 3.3% from the 4.53 million in February of 2023. Again, if we rewind the clock, the interest rate environment was more favorable then. So it's understandable that we saw more sales activity in February of 2023 compared to 2024, but we're still in pretty good shape. There's still quite a bit of activity. There's a lot of pent-up demand that we've talked about ad nauseum at this point. So things are moving in the right direction as far as getting to a quasi-healthy, I'll call it that, quasi-healthy operating real estate market. Now let's talk about the inventory. The inventory is what we look at. How many homes are for sale right now? What's the average closing time? What's the average of activity in the market? How many homes are being sold in a particular month? Things like that. And then that lets us know, okay, if we have a sales rate happening of X amount, we have 2.9 months worth of inventory. That means the current real estate market has enough inventory and supply right now to support how the sales activity is going right now and trending right now for the next 2.9 months. So right now, the inventory of unsold existing homes was up 5.9% from January to 1.07 million homes. So that's quite an increase. So that means there's more inventory hitting the market. I could tell you from where I'm situated, we're not feeling that very much here in the northern Jersey area. But by and large, across the country, we are seeing more inventory open up, which is good news. There's so much pent-up demand. More inventory will mean more opportunity for success for those who have been shopping for maybe a few months, maybe a couple of years now. Compared to the previous year, that's up 10.3% from 970,000 unsold units. The current inventory represents 2.9 months of supply, as I mentioned, and that's a slight change from January. January was at 3 months. We're splitting hairs. I'd say that it could be just a little bit of a dip down as a function of less people listing their homes if they need to purchase something else because the interest rate environment got very volatile here in the beginning of the year. And what happens, we saw back in October of 2023 when the rates shot up, we were seeing rates hitting over 8% for some. A lot of people pulled their listings. So they had homes that were on the market to sell, rates went up, panic sets in, and listings got pulled. If that didn't happen, then we saw price reductions. So the inventory right now, I would still say, is healthy by our standards compared to the fact that we all understand that we need a lot more inventory to get close to meeting the amount of demand there is for buyers, particularly in some regions where I am in the Northeast. That's definitely one, but there's other pockets throughout the country as well. In other places like Florida and South Carolina, I can speak to those from personal experience. There's a ton of inventory. So there's plenty of opportunities there. So there's a little bit of a disparity depending on where you are and where you're located in the country. But for right now, we're in pretty good shape. I'd like to see that go higher and create more opportunity for a lot of buyers, particularly first-time home buyers who've really gotten a raw deal lately with higher interest rates, an anemic market with no inventory. So hopefully we could see these things start to change so that people can enjoy buying their first home or buying the home that's right for their family that they've been waiting for the right opportunity to take advantage of. I'd also like to share a couple additional pieces of data that are very important as we're looking at sales numbers, what's been happening in the real estate market. Properties typically stayed on the market for an average of 38 days in February. So those are getting longer now, and that's up from previous months. So properties are being listed and sitting for a longer. We're not seeing someone list a property on Thursday or Friday, have an open house on Saturday and Sunday, best and final offers in by Monday or Tuesday, albeit that still happens, and that still happens in highly desirable areas. But it's good to know that the average is trending in a better direction. We're seeing homes listed for sale for longer, gives more opportunity for more people to see. First-time homebuyers, here we go. They accounted for 26% of the transactions in February. And that shows a slight decrease from previous periods, but we're splitting hairs. It's a small margin. All cash constituted 33% of transactions in February. So that's an increase month over month and year over year. There's still a lot of cash out there, and that's tough for people to compete with. We have solutions at Guaranteed Rate that help clients, and the proof's in the pudding, and I've seen it work for people. But still, if you're up against cash, that presents quite a challenge. The share of homes bought by investors or people who are buying the home to be a vacation home or second home, that increased to 21%. So, talking about markets like Florida and South Carolina, if there's a lot of inventory there, that's prime real estate for people who may be looking for an investment property or a second home to vacation to, if they can lock in the purchase price now. And there are sales price reductions happening in those markets due to the higher amount of inventory. If you can catch a deal by today's standards, that's a wonderful opportunity. So that was 21% of the sales in February. Now here's the more important one, the most important one in my opinion. Distressed sales stayed steady at 3% of the transactions in February. A distressed sale is pre-foreclosure, which is when your home isn't foreclosed upon, but someone buys your property. As the homeowner, you may not walk away with anything, or you'll get some money out of it, but it means you were behind on your mortgage payments. Now you sold your home. That's pre-foreclosure. The distressed sales is part of pre-foreclosures, takes a portion of that, as well as foreclosures, which is when the bank does take over title to the property after default significantly. And then there's also short sales. You can say, hey, I need to sell my house. I'm making timely payments. However, I owe more than my home's worth. That's not the case a lot of the time, especially right now with values jumping up as much as they have. But still, there's a component of distressed sales. That is that. And that's at 3%. And that's up from 2% in January. I labeled a couple other data points as splitting hairs, and that was appropriate. This, though, I can't say that this is splitting hairs. A 1% increase could be signaling that now we're starting to see some cracks in the foundation of the economy, particularly the foundation of the American consumer. I've been hearing on podcasts I listen to and news articles that there is becoming a larger share of homeowners that are having difficulty meeting their mandatory monthly obligations, whether it's credit card debt that's run up, which is, oh, by the way, the highest it's ever been in U.S. history for the American consumer, or there's just other obligations, and just the rise of prices of everything is creating an environment that's making it difficult for people. There are cases of people liquidating retirement savings so that they can have something to hold out, or leveraging lending and getting a loan from their 401k so that they can make ends meet. We live in a time right now that there's a lot of levers to pull if you need to try and make ends meet, to get over the hump. However, if it takes longer to get over the hump, then everything will start to dissipate more quickly. So 1%, it's nothing to flash an alarm on, but this is giving us a signal that maybe not everything's super hunky-dory. And if we start to see an increase in foreclosures and distressed sales, that can start to soften the real estate market. It's not going to soften it very much. It's just, instead of it being maybe 10% year over year property appreciation, value growth, we're talking more like 5. So we're not talking about a lot there, but it does set the stage for changes. And as we know, all these changes are very important for us as we're trying to manage accordingly, whether it's planning to purchase the home for ourselves or in our family, whether it's to plan to sell your home, or if you have an estate and you have family that's passed on, unfortunately, and you need to manage that property. These are things that we need to take into account and consider. Now I like to do the highlight reel. We're just going to go over the main key points, and we're going to go beyond the seasonally adjusted numbers. The inventory is at 2.9%. Again, that's down from 2.9 months, and that's down from 3 months in January of 2024. And here's the existing home sales data, seasonally adjusted and not seasonally adjusted for single family. 3.97 million units, that's the seasonally adjusted number. That's up 10.3% month over month, and that's also down 2.7% year over year, as we mentioned before. Not seasonally adjusted, there were 245,000 single-family homes sold in January. That is up 15.6% month over month. It was a big increase. And also up 1.2% year over year. Seasonally adjusted figure shows it being down, but the actual shows it being up. So there's good volume, there's good trending activity when it comes to homes being sold. The median sales price, $388,700, and that's up 1.5% month over month, and that's up 5.6% year over year throughout the whole country. So home values are going up. I got to refer back to my other point. Waiting is not necessarily the answer. If you are interested in having a focused conversation, I encourage you to reach out. I've got a really phenomenal tool that shows you, based upon projections and just the cold, hard historical data, what the cost of waiting to buy a home is. I may do it on a future episode where we talk about that and kind of do the case study together. But if you'd like to learn more about that, please feel free to reach out to me, call me, email me, text me, or reach out to me on the socials. Everything's linked in the episode description. In February, the last data point to consider, which is also very important, what were the mortgage rates? What was the average? It was volatile, that's for sure. But what was the average mortgage rate? That sat at 6.74% for your 30-year fixed conforming loan. And this is according to Freddie Mac data. That's it for today. I know that was quite the data dump. There's a lot in there, but I encourage you to please share the show with anybody who may find this information useful. If you have questions, concerns, or anything you'd like me to highlight or particularly focus on, I encourage you to reach out anytime. Again, all of my contact information and ways to reach out is located in the episode description. I'll have your mortgage rate update on Monday. Looking forward to giving you the state of things now that I think I've got, hopefully, if the week closes out well enough, we'll have some good news. But until then, have a wonderful weekend, and I look forward to talking to you on Monday. Take good care.